Let's get into private credit now. It continues to grow in Australia. Attention shifting though to governance, with investors questioning whether stronger oversight can translate into better returns. Patrick William from Rixon Capital joins us for the first time this year. Happy New Year to you. So what is the attention shift, and I guess what are we seeing here in terms of more focus on governance?
So when I talk about governance, we talk about things like clarity of fund mandate, what the fund can't or can't do, transparency, and policies that ensure alignment between investors and fund managers. Now, historically, the market's been at worst, the economy's been at worst benign, which means loose underwriting policies or policies that aren't aligned with investors haven't been an issue. So investors see good returns and they feel reasonably comfortable.
So how does that transfer, I guess, into alpha?
So when market conditions are challenged, in 2026, I think most people agree is have a bearish view of the year. You know, there's a 30% chance of a rate rise in the next 2 months. This is when you're tested. So all that money you put out the door or are putting out the door, if you haven't got the right policies in place, you're not going to get, as an investor, a risk-adjusted return that makes sense. So you might get a good headline return in March or April, but you have a loan going to default in December. So that governance framework ensures that the money you put out the door sticks to risk-adjusted return profile that makes sense.
And this has been something that ASIC has been really focused on, we know, particularly into late last year. What are their concerns related to what you've just discussed?
I think part of their job as a regulator is to protect investors, but I suspect part of it is also the fact that financial services is a trust game, and the last thing you want is for an entire sector to lose the trust of investors. So they've come in, they've seen grey areas in the market where there can be substantial risk if market conditions declined, and they're stepping in early to say, look, everyone, you've got to get your policies and frameworks in place so that if things go bad or the economy goes in recession, investors are cared for.
You've been saying for some time there's a lot of demand out there for private credit, private capital. Are you still seeing it?
Absolutely. It's still a reasonably nascent market in Australia, and the biggest benefit we have versus, say, the US, the European market is there's more demand for capital than supply, which means good managers can still say no and sleep well at night.
Does anything in the macro environment change how much demand you think there is going to be for this space? So just talking about how the inflation print is about to come through, that we could be seeing RBA rate hikes this year.
I suspect it's sector-based, so retail, anything to do with discretionary spend. Not that we lend to those spaces, but those spaces I think will come under pressure. But if it's fundamental B2B, you know, businesses that keep the economy humming, businesses that finance other businesses, I suspect it's business as usual.
So if somebody was watching today and they're not necessarily involved in private credit, what would you say they need to do in terms of being diligent at looking at this space and I guess just try and maneuver into private credit?
The throwaway comment is always get financial advice, but if you haven't got an advisor or you're taking responsibility for your own portfolio, the key questions. One, if you're looking at a credit fund, do you understand what they actually do? And if the answer is they lend money, that's not a good explanation. Where do they lend? How do they lend? What's the risk profile, number one? Number two, and very important, is what is the fee structure? They charge you 1% and they take upfronts that are unquantified. That's an area of concern. So you just want to understand what the fund does, what the fund charges you, and you want a fund manager that will answer your questions irregardless of the size of your investment. So
I know you don't have a crystal ball, but what sort of, strong returns or sector moves are you expecting in 2026?
I think the market's always seeing change. So where we see continuing growth is fintech. Mm-hmm. So we finance a lot of B2B fintech funders, and there's just that disruption in the market where the banks are slower, the banks are pulling out of sectors because they're subscale or someone up top doesn't like it, and there are these new fintechs coming in. They're underwriting at a very, very sophisticated level, and we're seeing a lot of growth there.